Hi there, welcome to GrainTV. I'm Kevin McNew. It's Wednesday, January 6th. We had an up day in the grain, so let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was fractionally higher with a 1/4 cent advance, beans up 7.5, and wheat gaining 1.5 cents. News today was pretty light. There was a bit of a rumble again in Asian markets that started the day. China's currency, the yuan, devalued further. That led to some rocky starts in the equity markets. And the other news that came out in global markets was higher than expected oil inventories as announced by the US EIA. And so that sent crude oil prices plummeting to fresh 11-year lows. Overall, the grains were pretty well able to shake some of that negative news off and did actually turn higher, especially at the end of the trade, probably more as a result of short covering ahead of Tuesday's report. We did get some news from Informa. They gave us slightly different supply and demand numbers, especially on the supply side. We're looking at what they thought for South America. Let's take a look at that slide, and you can see, really they're higher on beans than what USDA currently has in store. USDA predicting 100 million metric ton crop for Brazil, Informa coming in at 101.4, and for Argentina, they're predicting 58.5 million metric tons, Informa is, versus 57 by USDA. And of course, USDA will be coming out with fresh supply and demand estimates on Tuesday. So the market's a little nervous about what that could potentially hold. From my standpoint, I see very little difference coming out of that USDA report. The final U.S. production numbers will be released. I don't expect them to be dramatically different than what we already have. And I think really the overhang in this market is the negative news that we have on the demand side. There continues to be competition from South America at a time of the year where we wouldn't expect it. This is their growing season. Traditionally, we are the dominant player in the corn and soybean world market. But right now, we're seeing, as a result of our strong U.S. dollar, as a result of devaluation in Argentina's currency, thanks to their new president, we're seeing actually the reverse. We're seeing Argentina's prices below ours in terms of corn, and we're seeing the same in regards to soybeans from Brazil. So that's very telling, I think, for getting any sort of demand stimulus. On the end user side here in the U.S., we're seeing margins for soybeans and margins for ethanol that are well below par, well below profitable levels, and so we're starting to see some contraction in soy use, in corn, although ethanol numbers out today were positive. I just don't see that persisting for much longer in light of the poor margins that the processors are seeing in the industry. But that's what we have for today. Tomorrow we're going to be talking about what analysts are looking for out of that Tuesday report. If you're really worried, and I think there's reason to be, about what the future holds in the next 3 months for grain prices, give us a call, 877-472-4607, or visit us online at grainhedge.com. We think the next 3 months are going to be pretty pivotal for grain farmers. That we've had this pretty stable point for the last 6 weeks, but that could be disrupted as we get that USDA report on Tuesday in our rearview mirror. And my question for you farmers out there is, are you ready for a potential another leg down in prices? If not, give us a shout. Maybe we can talk and help you figure out how to manage that risk. Have a great day and trade safe.